Today, we dive into the stormy waters facing South Africa in the first half of 2023. Dark clouds loom over the nation as it grapples with a series of challenges that have left investors worried about its growth prospects. In this video, we'll explore the causes behind South Africa's tumultuous period and its potential impact on the economy. So let's get started. South Africa has experienced a dark quarter marked by uncertainties and setbacks. One of the significant concerns has been the prevalence of blackouts, which have become a daily occurrence for the average South African. These power outages have raised investor worries about the negative impact on the country's economic growth prospects. The possibility of a grid collapse has further fueled investor fears. Foreign investors, in particular, had shown a reduced appetite for South African financial assets, including government bonds. The foreign shareholding of SA government bonds hit its lowest level in over 12 years, declining to 25.1% by the end of May. The talk of a grid collapse reached a fever pitch, causing panic among investors who feared prolonged power shortages lasting up to 3 weeks. This panic, combined with geopolitical missteps and allegations of South Africa eyeing Russia with arms, led to a depreciation of the rand, reaching almost 20 rand to the dollar. However, analysts have reassured investors that a grid collapse is highly unlikely. The structure of the grid and contingency plans in place make the manner, duration, and result of a collapse highly variable. Despite this reassurance, investor fears persist due to other factors beyond the grid situation. The weakening of the local currency against a trade-weighted basket of currencies has raised concerns about inflation. Diplomatic issues, such as allegations of supplying weapons to Russia and potential impacts on international trade, have also soured foreign appetite for South African financial assets. The US debt ceiling debacle and policy tightening by major central banks have added to general risk aversion. Thankfully, reduced load shedding intensity in June provided some relief and improved market conditions by the end of the quarter. Disinflation seems to be setting in, with inflation trending lower. Data releases over the latest quarter suggest that businesses have been more resilient than expected, boosting economic growth, at least for the second quarter. However, despite these bright spots, the overall picture for the second quarter and the start of the 2023/24 financial year remains bleak. The numerous structural failures, poor macroeconomic management, and political fallout from the South African/Russian alliance have contributed to a sharply weakening currency. Nedbank's latest economic assessment paints a cloudy and uncertain outlook for the remainder of the year. The direction of capital markets, the rand, and interest rates is difficult to predict, while consumer and business confidence are likely to remain under strain. Although inflation is expected to come down, factors like global weather conditions may impact key indicators like food inflation, causing a potential delay in its deceleration. South Africa narrowly avoided a technical recession in the first quarter, but annual GDP growth is still muted. Financial firms expect growth to range between 1% and plus 0.5% for the year. And that concludes our overview of South Africa's challenging first half of 2023. The nation continues to face uncertainties and struggles, impacting its economic growth prospects. As we move forward, it remains to be seen how South Africa will navigate through these dark clouds. If you found this video informative, don't forget to give it a thumbs up and subscribe to our channel for more insightful content. Thank you for watching, and we'll see you next time.